What's one mistake that you see new investors make that could easily be avoided?
A lot of people that I speak with, if a friend of theirs has said, do this, they're always going to listen to them. And a lot of the time it can be an unproven strategy.
Welcome back to Marketing Made Iconic. Today's guest is Harry Bennetto, the founder of Equity Property, which is a boutique buyer's agency helping investors build powerful data-backed property portfolios. After years in the corporate world, Harry made the bold leap to go solo. Now he's doing business his way, building strategic client partnerships, choosing his markets with intention, and growing his name through word of mouth and real relationships. He's here to unpack how everyday Australians, especially younger investors, can navigate this wild market with a clear head and a long-term lens. If you've been wondering where the smart money is going right now, or how to build a business on your own terms, this one's for you. Let's get into it. Harry, it's a bold move to go out on your own, and I know many listeners will be curious about the mindset shift and the actual realities of going solo. So can we start with your journey? What inspired you to leave the startup world and start your own buyer's agency?
Yeah, so Elise, firstly, thanks for having me on today. And yeah, I'd love to go
Absolutely.
into that in some depth. So I've spent the last 10 years of my career in a few different industries, including finance, property investing, and also tech and SaaS. So my journey over that period of time was always targeting, call it an exit of working for other people with the number one goal of being self-employed and running my own business. And yeah, I've found the leap of faith, as you may call it, to be very exciting, not without its challenges though. And yeah, so far so good. I'm really loving the journey.
That's awesome. And what's different now that you're building Equity Property solo, both professionally and personally?
Yeah, I guess like in terms of the professional aspect to it, when it's your business, maybe there's a little bit more of an emphasis on pride in the brand, and then also so much energy on going the extra mile to continue growing the business, knowing that you've got a seriously long-term outlook on it, rather than if you're an employee somewhere else and maybe you've only got a 2 to 3 year outlook on working for another organization. And then personally, there's work around the clock at all hours of the day, and
Didn't you do it for work-life balance?
yeah, work-life balance is always the long-term goal, but I think short-term, only a few months in, it's very much the opposite. And yeah, a young one of my own, as much time as you can with the family, and then also being able to prioritize the growth of the business as much as possible.
Yeah, I know from experience too that it's tricky in those initial stages, and you're like, I'm doing this to create balance in life personally, and where is the balance and when is it going to come?
Yeah.
But you get there. How is that? Like, what values or philosophies drive or do you integrate into working with your clients?
So like a big part of the approach is to make sure it's like very personalized. So every client is different. Every client has their own property investment journey and own set of goals and outcomes that they're looking to achieve. Like making sure there's a high emphasis on attention to detail, responsiveness, just basically being there. And I try and be as much as possible like an over communicator rather than one who just leaves it. And hopefully that's something that I can continue as my business grows, as I start to bring on a team and instill those values in the surrounds me. But yeah, a lot of it is just being as proactive as possible to try and achieve the best outcome.
Yeah, nice. You've spent over a decade in property investment, and it shows in how you clearly talk about the strategy. Your work and previous conversations combines data, relationships, and long-term logic to help clients build really strong portfolios. If you don't mind, I want to dig into that methodology a little. What's your typical process when helping an investor start or scale their property portfolio?
So focus is always on trying to line up with their longer term goals through property investment. And being based in Sydney, like a lot of clients that I'm looking after are Sydney based, and it's a combination of, say, rent investors or people who own the place they live in and maybe are not in a position where they can upgrade to their forever home just because the prices are so expensive in Sydney. So
Yeah.
part of the methodology is like really focusing on providing access to more affordable property options that present really high capital growth opportunities and doing it in a way where you can manage your cash flow and maximize your borrowing capacity in order to continue growing the portfolio with, say, not just like one, but to build a portfolio of several properties.
How do you balance using market data with more relational, like on the ground knowledge?
So with the market data, like I'm always looking at every part of the property investing journey. And when you're looking at it suburb by suburb level, there's clear distinction between each and every suburb that I invest in and the ones that I don't invest in. So for instance, right now across Australia, I'm just investing in 40 suburbs, which is narrowed down from 15,000 odd across the country.
Yeah,
So
wow.
yeah, it's very specialized. And then on a ground level, like I've been to each and all the suburbs that I am buying in. And as you've touched on, like there is a key relationship element to being the buyer's agency space, working really closely with real estate agents and also other third parties, but really getting a feel for at a street level how each suburban areas is presents and, you know, how attractive they are for key indicators like gentrification and attracting people with more wealth to move into these areas when they get priced out of the suburbs they were previously renting or living in.
Yeah. What makes a property investment worthy to you?
So yeah, again, it goes back to what the client's looking to achieve, but a
Yeah.
structurally sound property is a non-negotiable and one that is highly likely to achieve capital growth and also rental growth, which are two of the most powerful drivers from a numbers point of view.
Yeah, I bet. Is there a balance to be had between, or do you ever see a lot of anomalies between achieving capital growth and rental growth?
Look, in a perfect world, you can achieve both if you're being
I
very
love that.
selective.
Yeah,
Yeah.
yeah.
I think it's a bit of a myth where you need to trade off, say, high capital growth with high rental yield. Generally, like it's not always the case, but you can often combine them and certainly achieve a very high outcome or very high rental yield as well as high capital growth at the same time.
Yeah. And I guess that comes down to those specific areas that you were talking about across Australia, right down to the suburb level to really identify those particular opportunities.
Yeah, absolutely.
Yeah, cool. I know the market's in a pretty unique spot at the moment. The rising prices, which is not too strange, higher interest rates, shifting migration patterns. You talked about a few standout markets where there's long-term potential. So let's bring those insights to the table a little bit. Which markets are you most excited about in 2025 and why?
It's been a really interesting time in the market where there's been three capital cities that have achieved massive amount of capital growth over the last 5 years, being Brisbane, Adelaide and Perth,
Yep.
which were very mediocre to low performers over the previous 5 years, being 2015 to 2020. And what appears to be most interesting at the moment is the Melbourne and Victorian market. And it has had a pretty tough time over the last 5 years. It was probably the hardest hit by COVID, had a max exodus. But as you've touched on there with migration trends, there's been a big shift back to Melbourne and Victoria where people are chasing affordable property to live in from a renting and buying point of view. Also, you know, it's a major capital city. I think it's either just overtaken or about to overtake Sydney for highest population, but prices are about 50% lower than Sydney. So it does present a lot of affordable property options. And look, I think in the next 5 years that will change again, just because it is of the five largest capital cities in Australia, the most affordable right now.
Yeah, cool. What signs do you look for when identifying a future high performing location? You probably just mentioned a few to us, but
Yeah. So look, when I'm investing in, if I'm choosing an overall market, I want to make sure that it's not really late in the growth cycle. So the three cities I mentioned before that have achieved a high level of capital growth, I just find them less attractive because they've already had the growth. Looking for generally, I'm looking for areas where there hasn't been a huge amount of capital growth over recent years, but they have got a really consistent long-term trend, maybe over a 20-year window where capital growth has been consistently moderate to high, and then creating or finding an opportunity where there has been lower capital growth and take advantage of more value in the market. Uh, Looking for a number of key indicators that I've touched on, like rental growth, decreasing days on market for sales, generally targeting areas where there's a high owner occupier percentage because generally speaking, they sell their properties less frequently as an owner occupier. And it
yeah.
also means that there's less rental stock on the market, which is a key indicator when you're an investor.
Yeah, interesting. And you mentioned this before, but what do you make of the concept around rent vesting, and especially for younger Australians?
I think it is such a powerful way to get access to the market because it's very easy as a young Australian, particularly if you're living in a more expensive market, which unfortunately, like a lot of young people who are at uni or just graduated, they go for an early stage job, they're going to end up in a city a lot of the time. And a lot of those people want to live close to work or in these more expensive, you know, city hubs. And affordable housing is in low supply in those particular markets, inner city, capital cities. And rent vesting does create that opportunity to continue living where exactly you want to live, where rent is more affordable than paying off a mortgage, and look to get access to other markets that you might not know on a personal level. But with the likes of a business like equity property, you can target them and achieve really high outcomes without breaking the bank with going all in on the property. That's a really powerful tool around investing.
Yes, this is a concept that has come up in my discussions quite a bit lately, and especially I have a 17-year-old who I'm thinking about his future, and he's thinking about his future and wants to get into property, and it's always going to be a very good long-term wealth building strategy or even building financial freedom. But yeah, we were like, how did this younger generation actually do it? 'Cause it's so different to what we grew up with, such a different market, and what even our parents grew up with. It's more challenging in a way, but we need to think a bit more creatively and actually rely on expertise like yourself, and not, I think what our children have to learn in the next generation is we don't have to do everything ourselves. We can lean on and leverage specific expertise that's available to us, like buyer's agents like yourself, to actually succeed and find creative ways to achieve good property portfolios.
Yeah, definitely. I totally agree with all of that. And I think it's almost a need for a lot of inner city livers or people living in the inner city where you can either postpone your purchase, try and save forever, but the rate that you need to save at is not going to match the property price increases. Okay. For a lot of people that are hesitating with that first property purchase, trying to buy where they want to live, often it can make more sense to get into the market at a lower price point and build the stepping stones for the portfolio to grow, and then down the track, ideally buy something that you can live in with a more
Yeah.
long-term outlook.
The other thing that's been coming quite obvious to me is around the buyer's agent space has actually exploded in recent years. And you've said to me that the way you stand out has been consistent and with a focus on building those long-term relationships. So I want to talk about business growth and personal brand. What's been your most effective marketing channel so far?
So a lot of my network that I've established, the last 10 years have been, you know, involved in the property investment space. It can be friends of friends that are referring clients to me and they've got experience using me, which is a really powerful tool. And then also when I'm dealing with B2B partnerships, like when I'm targeting other businesses out there, whether it's an accountant or a mortgage broker who have access to clients that are looking for assistance when they're purchasing an investment property and wanting to build a portfolio, that's also a very powerful channel. In terms of being online, I'm not in a space right now where I'm advertising on social media or on Google, for instance, and I don't really want that high volume approach where just see what sticks. It's more keeping it very personalized, and I'm finding that through connections within my network is the best way to grow the brand and also build the exposure.
Yeah, nice. They're really building really solid and staying firm to your vision and what your you and your business stands for. Particularly around LinkedIn, what's worked for you there?
So LinkedIn's been a really good tool for me. I've been able to break through that market quite a lot. And I think it's about being consistent, about being active on there. It's very easy to let a couple of weeks or a month to go by and it's hard to get the same level of traction. So I'm trying to be as active as I can with time permitting, make sure that there's solid quality controls on what the content is, but important to the brand that I'm building for myself and also for my business is just making sure that the topics that I'm presenting on LinkedIn are cutting through and really engaging the audience out there. So I want to make sure that there's relatable content, things that are going to drive interesting conversations and also potentially think about where they're at or people within their network who might be able to benefit from having a conversation.
Yeah, nice. So very much an attraction strategy, drawing people into you and into your space to engage, be educated, and then potentially become a client.
Yeah.
And how do you navigate the competition and still attract the right fit clients?
So, as you've touched on before, the buyer's agency space has become a lot busier than it was a few years ago. And it is Australia's number one pastime, being property investment gurus, I swear. So it's of course, there's a lot of competition out there. And again, it comes back to those trusted sources and networks, but being able to relate and engage with people once I've started that conversation. Like a lot of the time when I am speaking with a potential client, they are speaking with a number of other buyer's agents, depending on where they've been referred from. So, I think the fact that I'm running my business is attractive to them, but then also just making sure that they can understand the methodology that I've presented and understand the value that I'm going to be able to add and doing it in a cost-effective manner as well.
Yeah. And if they understand the benefit of your personalized service and that you're going to be walking alongside them in a very supportive, empowering way, and if they see the benefit of that, then I guess that's the easy decision for them.
Yeah. Well, I hope so. Yeah.
Yeah. It sounds like you've been quite successful there in I think a really important piece that a lot of businesses miss is building the trust factor. And I guess if it doesn't come naturally, it's actually a hard thing to figure out. How do we build that trust factor, even with clients that are referred, if they don't have that previous experience and there's definitely competitors that they can go and work with? That's quite challenging. So kudos to you.
Thanks.
So moving on now, whether you're a first-time buyer or investor building a portfolio, it's so easy to get overwhelmed by all the conflicting advice out there. Harry, let's simplify things a bit for everyone. What do investors really need to hear right now? What's one mistake that you see new investors make that could easily be avoided?
A lot of people that I speak with, if a friend of theirs has said do this, they're always going to listen to them. And a lot of the time it can be like very much like an unproven strategy. I think like having seen like the off the plan apartment space, there's inherent risks there that you don't get when you're buying an existing property. That's probably like one of the key things that are avoidable as a first time buyer or first time investor, that can always present as a mistake. And look, on top of that, and I think it's just about, getting as much information as you can from a variety of different sources and make sure that you have an unbiased approach to whatever decision you end up making.
Yeah. Can disconnect a little bit emotionally from it to make a smart decision.
Yeah, definitely. Yeah, I think that emotion element is something that you want to eliminate as much as possible when you're buying a property. If you're buying an investment property, for instance, and you never plan on living in it, then, you shouldn't imagine yourself living in it, if that makes sense.
Yeah, good advice. And what's one mindset shift that's helped your clients stay the course, do you think?
So in terms of mindset shift, I think, again, that emotion element is so important. Being very targeted, the property investment strategy, and not being clouded or allowing your judgment to be clouded with emotion. Or I reckon there's so much power in being able to purchase with a pure investment lens. And,
Yeah.
that is so important in the current market where there's a lot of movement. There's a lot of assumptions that are being made about things like interest rates, where the economy is going globally. And it's just sticking to your guns and having a long-term outlook is so important.
And what is one thing that you wish people understood about property investment?
Sorry, say that again.
What's one thing that you wish more people understood about property investment?
I think
One more thing.
One more thing. Yeah. Look, I think it's, touching back on the owner-occupied versus rent-best in something, that's a conversation I have daily. And a lot of the time people see owner-occupied as being the better or maybe safer option because they can live in it. And I've seen that go not necessarily the way it was intended, where the client might end up buying a place to live in and overstretching and not being in a position where they can comfortably service their mortgage. And in the current interest rate environment, for instance, where there's been a lot of uncertainty about where rates are going and how they have remained high for a longer period than a lot of property owners would have hoped, that has proved costly when people have made the big leap, say, and purchased a property that might have been just beyond their budget. And, it's really financially handcuffed them. So I think that's a key thing that I wish more people would be more wary about. Yeah.
Yeah. And finally, what gets you out of bed in the morning?
So I'm, apart from a screaming
Apart from the
baby,
little one waking you up.
yeah, daily one, but I'm jumping out of bed, with a lot of motivation every day to go to work, whether it's in the office that I work out of or from home. I do a combination of both. But I'm really
Nice.
excited about growing my business and providing an excellent service. And a lot of the focus that I have is on building, the long-term relationships where I can bring on clients that are going to be existing clients. But keeping that mindset focused on growing the business has definitely been getting me out of bed at the moment.
Yeah, I bet. Harry, thank you so much for joining us. What a grounded and insightful chat. For anyone that wants to connect with you or learn more about equity property, where's the best place for them to find you?
So for anyone that wants to get in touch, jump onto the website equityproperty.com.au. And if you want to have a chat, book a call.
Perfect. And to our listeners, if you took away a strategy, mindset shift, or market insight today, share this episode with a friend who's building their wealth too. We're all about helping each other win. And thanks for tuning in to Marketing Made Iconic. See you next time.